As we mentioned earlier in our top story, South Africa's Blue Financial Services may have found a white knight. The financial services company says Mayi-buye has agreed to buy 163 million rands worth of shares at 13 cents a share, becoming the majority shareholder. In addition, Mayi-buye will provide the company with 300 million rand in debt funding. The plan needs the approval of the company's major shareholders, though. I spoke to CEO Dave van Niekerk about this transaction a little earlier.
It's very important to know that we've been busy for roughly 8 months now looking at a new shareholder, a strategic shareholder to come in to Blue Financial Services. We engaged Rothschilds towards the end of last year to get involved in this process. We had a number of parties that were interested in buying Blue, merging with Blue, making an acquisition of the company as a whole, putting money in. And after considering all of the parties that were interested, Mayi-buye came out as the leader. Mayi-buye are putting in 163 million rand at 13 cents, which gives them majority control of the business. And they're also putting in an additional 300 million rand debt into the business. So as a whole for the group, it's 463 million as a capital injection into Blue Financial Services.
So what we're looking at is a recapitalization of the business, leaving Mayi-buye though with what kind of stake? Because we say majority shareholder, but what percentage are we looking at?
Roughly in the 60 to 65% range is kind of where it sits at.
And then leaving you with what, and then your other respective shareholders like ABSA, like the IFC?
Well, no one's selling out. Everyone will just dilute by that percentage.
Okay, well, let's take a look at what went wrong and why Blue has had to go down this route in the first place.
Yeah, sure. Okay, very important. Basically, our business model over the last couple of years has been to raise wholesale capital internationally and then on-lend it locally. And that model worked great when the world was on the incline. And as the world went through its turbulent times, the raising capital internationally became tougher. Secondly, lending money into local markets, you started to get a bit of a mismatch in terms of currency. And then thirdly, you've got consumers that are under pressure in terms of repayments. And that impacts your provisions. And in terms of IAS 39 and IFRS, you need to provide even on your performing loan books against what the trend is at the moment. So even if you've got a performing loan, you'll end up passing a provision against it. So our provisions shot up. When you have a provision impairment, you'll end up having goodwill impairment on your balance sheet. And recently we put out a trading update saying provisions on the loan books, a goodwill and a deferred tax knock has resulted in significant losses for the group. And that we knew would impact the equity side of the balance sheet. And we're taking that into account. We've already anticipated that from towards the end of last year would be the issue. And that's why we were out looking for a strategic shareholder that would put new, fresh capital into the business. But also you've got to acknowledge we built a business very quickly, 14 countries across Africa, 500,000 customers. We needed to look at our own systems, processes. And so we're looking for a strategic shareholder that would bring credit expertise, also collections expertise. And Mayi-buye has that. They're a private equity firm based here in Randburg with a lot of equity investments within sort of the credit arena. And I mean, Investec is one of their shareholders.
Well, with all of that and, this entire route that you've just spelt out, that Blue Financial Services has been down. I mean, there was, we've seen serious value destruction from trading above 6.50 Rand at one point in time back in 2008 to now looking at yesterday's share price, I think sitting at 16 cents. You're selling at 13 cents. And with that, some have suggested, doesn't this call for a change right at the top? Are we seeing that kind of evolution? To what extent?
Absolutely. And I think fully taking into account that, 8 years ago, Blue wasn't really around. I mean, 8, 9 years ago when we created the group, there wasn't anything. We started it from scratch. At the 6 Rand levels, we were trading at a very high PE, a very high multiple. The world was on the incline again. Everyone was hyped in terms of what was growing. You've got no control over the fact that you're overvalued. And to some respects, the ability to raise capital when you're overvalued is also a problem. So now we're probably undervalued. But you need to do a transaction that makes commercial sense at these levels because that's where your share price is sitting. So in terms of value destruction, well, we had to create the value in order to destroy it. We created significant value in terms of 13 countries, the customer base, the loan books. But yes, and it's taken a bit of a knock. But the fundamentals are there. It's a big distribution network, 260 branches across Africa, 500,000 customers. You still got a loan book, a gross loan book before provisions of 1.5 billion rand.
What are you more wary of now? As you said, you built you were supposed to, you built the business up, and it had to get to that stage before you were able to, destroy it, so to speak.
Well, it didn't destroy it, but yeah, it had to take its knocks.
Let's take a look at some of the lessons then learned going down.
Well, absolutely. And I think what we have to take cognizance of is entrepreneurs start businesses. There's a certain stage where you've got to get more corporate and you've got to get different skill sets in. And I think we might have waited a bit long to get those skill sets into the organization. And I think that's what the new team brings on board. And we will restructure. And at the top level, we talk about, at a board level, we're going to restructure. So we're going to be restructuring our board. And that'll, more detail around this will be released on Monday when we have a detailed announcement. And ourselves and Mayi-buye will be going out jointly and saying, this is how we're going to restructure Blue. This is the process going forward. But most certainly, there'll be a restructure at the board level. We recognize that the entrepreneurs must hand it over to the more formalized managers who are good at managing back offices and systems and processes. And I think that's the evolution that the business is going to go through.
If you take a look at this evolution process, then, I mean, all of these moves and all of these changes that are taking place, what does it spell for the strategic direction of the business moving forward?
Well, I think what's very important is Blue is still perfectly aligned to be one of the biggest credit providers in Africa. Distribution, branches, loan books, customer base. What this spells is that the group will have more skills coming in from a collections and a credit granting perspective. It'll have more capital coming in. Having a capital injection like this will unlock much more debt for the organization from many organizations across the world. So it'll see a big new rejuvenation in terms of debt and capital flowing into Blue, which will see growth in terms of its loan book and its performance. We still plan on expanding in Africa. We plan on growing on the African continent. We plan on even expanding our product offerings in South Africa. Mayi-buye brings a bank account offering. It brings mortgages to the party. So there's a lot more product enhancement happening as well as growth within the African continent.